What's up everybody, it's Levi from Wall Street Survivor. As we all know, predicting where the stock market is going to go and picking individual stocks is an extremely hard task for investors like you and I. Predicting where the stock market is going is hard. You can stare at charts, pick trend lines, do all sorts of technical analysis, or you can try to choose to dive into the fundamentals of a company, analyze their financial statements, read up on all the news, keep up with all the Wall Street analysts, and read what they're saying. At the end of the day, it is almost impossible to entirely stay on top of your portfolio and to continue to pick new stocks all on your own. There are a lot of companies out there that sell stock picking subscriptions and claim to help investors pick the best stocks. We've talked a lot about these companies before and reviewed their services, companies like The Motley Fool, Zacks, and Stockbroker. But today we're talking about a new player in the stock picking game, and we're going to dive into their newest service offering and see what their stock picking service has to offer. Today we're talking about Seeking Alpha, and I know they've been featured on this channel before. Seeking Alpha is primarily known as a crowdsourced research platform and an analysis tool. I'll briefly review what they do, but if you haven't seen my full review on the channel, check it out if you want to learn more about Seeking Alpha. Like I said previously, they've been an online platform for anywhere from amateur investing lovers to expert stock analysts to follow and publish their thoughts and research on what's going on in the stock market in general or for very specific individual stocks. They also have developed a quantitative model for predicting stocks that are going to go up or down in the future. While they're not always right and their past performance definitely doesn't indicate any future performance, since inception, their strong buys have strongly outpaced the S&P 500 and their strong sell rating from their quantitative model have massively underperformed the S&P 500. But today we're talking about something new from Seeking Alpha with their new service AlphaPicks, which gives you the 2 top-rated quant stocks every month from their time-tested quantitative analysis model in order to help inspire your own research about what the best stocks are to buy every month. Seeking Alpha's newest product, AlphaPicks, is a subscription service model where you can pay an annual or monthly fee to receive their 2 top quant stocks each month. I've been a Seeking Alpha Premium member for the past couple months. I will say that although their quant model is a super helpful place to start with your own stock research, it is hard to pick even among their top quant stocks where to invest because frankly they analyze so many stocks and there are so many top quant stocks that of those top rated quant stocks it's even hard to analyze which ones to add to your portfolio from there. What I do love so far from what I'm seeing from AlphaPicks is that they're offering you something that they've been testing and trying for years. Although it is productized in a new way, they've been using this methodology and picking outperforming stocks for years. And though, like I said, there's no way to predict whether this model is going to continue being profitable and outperform the S&P 500, pretty much the best thing that a stock picking service can offer is a winning track record, and they certainly have that. So before we dive too much more into AlphaPicks, let's just check out their quantitative model and its performance in the past, how they've picked stocks that have continued to outperform the S&P 500. If you go onto Seeking Alpha's website and search for AlphaPicks, this is the page that will pop up. You'll see that the same model that they've now packaged and are selling as a stock picking service, they've been using since 2010. It's also important to note that this was not some free service that they're using, it's free analysis that they've been gathering over the past 12 years that they're now all of a sudden charging for. The top quant rated stocks were something that came with their premium service, which typically costs about $240 a year or $20 a month. So they're kind of just repurposing it in a different way, which filters out their top quant stocks even more, gives you 2 picks a month, and only costs right now $99 a year. So if you've never used a Seeking Alpha product before, just know this isn't just coming out of nowhere, and it is coming with years and years of time-tested strategy and analysis. And if you've already been a Seeking Alpha Premium member, but you find yourself overwhelmed by the amount of good stock choices that they've chosen and simply don't want to invest the time to filter through their top quant stocks, AlphaPicks is a cheaper service than Seeking Alpha Premium. It kind of narrows down those top quant stocks for you. As you can see by this chart, over the past 12 years, if they would have been selling AlphaPicks, you would have seen a 470% return compared to the S&P 500's total return of 290%, which means that over the past 12 years, you would have outpaced the S&P by 180%. But let's break down those numbers a little further. So they have this quantitative analysis model that they use to rate stocks as strong buys, and now they're taking that whole list of highly rated quant stocks and filtering them out to just 2 every month. How are they doing that? AlphaPicks has defined 5 criteria models by which they pick their stocks. First, each stock included in AlphaPicks has to have had a strong buy rating according to their quant model and have held that rating for at least 75 days. So you're not going to get any stocks that just all of a sudden become a good buy, and then when the analysis analysis changes 10 or 30 or 60 days later, you're stuck holding the bag. They have to hold this strong buy quant rating for at least 75 days to be eligible in the alpha picks that you receive each month. Second of all, each alpha pick has to have a market cap of over $500 million. Third, the stocks have to be traded as common stocks only, no ADRs. Fourth, the stock price has to be greater than $10, so no real penny stocks here. And also, one thing that I really like is that the highest rated stock at the time of selection must not have been recommended to investors within the past year. So one, there's a huge benefit to knowing the criteria for these stock picks right up front, and I like how they are not hiding that from investors. Two, it seems like most of these criteria are protecting investors from super high-risk stock picks. And although there may be more high-risk, high-reward stocks out there, I think in general, especially the market cap and the penny stock guideline that Seeking Alpha is setting with these criteria generally will help protect investors from super high-risk stocks. But perhaps my favorite criteria is that they can't recommend their highest rated stocks more than once within a year. I found that with services such as the Motley Fool Stock Advisor, they often recommend the same stock multiple times within a calendar year. To me, sometimes that feels a little bit like cheating, and although I'm a believer in dollar cost averaging and riding out with your winners, the reason that we pay for these services is not to get the same recommendations multiple times, but to pay for people to discover new stocks for us that otherwise would have been a lot harder to come to on our own. So we've talked about how AlphaPix methodology is not new. It's been time tested over the past 12 years. We've also talked about their performance if they had been selling this service using the same methodology over the past 12 years and how it's outpaced the S&P 500 by 180%. We've gone over their criteria, which I love that they're coming out and putting right at the front of their offering before trying to convince you to buy their service, and generally I think protects investors against a lot of unnecessary risks. So now that we've reviewed those, let's talk about what the process of being an AlphaPix subscriber will actually look like. So as a subscriber to AlphaPix, how will you receive your 2 stock picks each month? Well, they're going to ask for your email address and you're going to get communication from them via your inbox. The first pick each month will be on the first trading day of every month, and the second pick will be announced on the closest trading day to the 15th of each month. At the beginning of each month, stocks that were previously picked as AlphaPix that have now been downgraded to strong sell or sell by their quant model, they'll suggest you sell them. And if a stock is downgraded to neutral and holds that neutral position for 180 days, then they will also recommend that you sell that. So that's a review of the Seeking Alpha quant model, which is the methodology behind the new AlphaPix subscription. A little bit about their past performance if they would have been selling this the entire time they've used this methodology, and what you can expect as a subscriber to AlphaPix. Now, the one last thing we gotta talk about is price. Typically, they're saying that they will sell this service for $200 a year, technically $199, but right now they're offering an introductory offer at just $99 a month. So if you're interested in trying out AlphaPix and want 2 top-rated quant stocks based on their time-tested model delivered to your inbox every month, make sure to check out Seeking Alpha, or if you want to support this channel, feel free to use the link in the description below. You absolutely don't have to click this link. I'm not trying to convince you that AlphaPix is the best stock picking service in the world, but I'm just giving you the facts of what their performance would have been in the past and try to tell you what you can expect as a subscriber to AlphaPix. So if you are interested in AlphaPix and think it could be a great place to start with your investing research, or you just want stock picks delivered to your inbox every month so that you can invest without taking the time to have to analyze things yourself, then definitely check out AlphaPix using the link in the description below. Again, no pressure, but I definitely appreciate everyone who supports this channel by using our link. Thanks guys so much for watching this video. Let me know in the comments how it goes if you do choose to try AlphaPix, or if there's anything else you want me to follow up with in another video. As always, I appreciate you liking this video, subscribing to the Wall Street Survivor channel, and I'll see you guys in the next one.